G'day, welcome to Closing Bell. I'm Charlie Ullman, a fresh face here. You've joined with the ever-present Murray. How are you, Murray?
I'm not so good, Charlie, quite frankly. We had our farewell for Callum last night, and to tell you the truth, I woke up on the couch in the office this morning.
Yeah,
So
a little bit shaky.
I'm a little bit shady this morning.
We're holding on to our waters.
I've had a coffee. I'm feeling good and ready to go.
Nice.
And welcome to Closing Bell. We're hopefully going to have a bit of fun.
Yep, so you'll see me around here for a few more of these, hopefully. Hopefully things go well. Today we'll be talking about interest rates, obviously the cuts that came in the US, looking to a couple of ASX winners, obviously what's happening with gold, and maybe at the end we'll talk about some AI because there's been a lot going on in AI. But obviously the big news right now is the interest rate cuts.
Yes, well, I mean, it was all a bit of a fizzer.
Yeah.
I think everyone was on tenterhooks that it was going to possibly be a 50 basis point cut because the unemployment numbers have been terrible. They've been going back into the data, and everyone's realising just how bad it is actually.
1.2 million jobs were cut off the revision.
Yeah.
That's the largest cut in the history of all cuts. It's kind of crazy.
Pretty crazy. And it makes you realise, okay, so, and this is where we're going to talk about the AI a bit later. It's like, are we starting to see the initial signs of companies now, after a couple of years, working out how they're going to allow AI to add efficiencies? They're now starting to take action. Is this just the start of a wave that's going to affect things in a big way? I mean, this is a big issue that we all have to think through, isn't it?
I think we have an original idea on this, though, so we'll explore it later. But we'll start with the cuts. So their median dot plot was for 3 more cuts till the end of 2026. Do you think that they're going to be accurate with that? Do you think that's kind of...
Who knows? I mean, I don't know. And as we will talk about later, if the unemployment numbers, if we are at the start of an unemployment wave from AI, possibly they are going to cut more than we think. Maybe they're going to go, holy crap, unemployment's going up like this.
Yeah.
But as I've said months ago, possibly we're going to see stocks going up, unemployment going up, which would be very weird.
Well, the stock market isn't the economy. It's always going in that thing where there's that lag.
Well, if the margins start to go fly, if you can cut 10% of your staff and use AI, all of a sudden your margins have just gone way up.
My favorite phrase of this is Scott Galloway. He described it as corporate Ozempic. I think that's pretty accurate with that. The ability to cut those costs.
Cut the costs massively. Productivity way up for what's left. There's going to be unemployment. Does that then start affecting real estate down the track?
True.
But will stocks take over from that? Is it going to be that? Is that the world we're going to go into, where stocks, their free cash flow goes through the roof? Is that why stocks are going flying now?
Yeah, but I think it's interesting the point you raised about this kind of expectation of 50 cut, that we only got the quarter cut. I mean, if you saw it through gold, I think gold was probably one of the clearer examples, or what the US dollar.
Yeah,
one of the two where you saw this kind of expectation. So if you look at that on the charts.
If we have a look at the US dollar here, so here's your long-term chart, 2021 to 2023 rally. So that's the wave structure that I look at, pricing everything off, and I've been saying for quite a while, if it breaks below the low of the whole structure, because it has had a terrible year. So here's been the low for the last couple of years, and it's started the year up here, and the US dollar has been absolutely hammered, and it's still below that major low from the last couple of years. So this whole period here is that the market deciding, wow, is it really gone, which means it's going to just completely collapse, or is it now oversold and it's going to have a balancing up period, going back to the midpoint of this range? So that's what the market has been in this, stuck for months. It's just in that decision phase. Is this dollar going to get absolutely pummeled? And so when the interest rate cut happened just the other day, the US dollar was down below that low, right? So it was down there ready, if the 50 basis point cut happened, to possibly collapse. And the same thing with the gold. Gold had rallied very strongly into that, thinking they might actually do 50 basis points.
Yeah.
So what we're seeing at the moment is that relief sort of rally, right? So we are seeing a jump, and it is from very oversold levels. So it's the market's now saying, right, they're not going to just completely lower rates rapidly because of what's going on with employment, et cetera, et cetera. So they're not panicking, which is probably a good thing.
Yeah.
How I'd read it now is, we've now got a great line in the sand. If that US dollar goes back down through those lows in the next few weeks or whatever, if the data keeps weakening and everyone goes, wow, they're actually going to have to really catch up, they're behind the ball there. They've really got to catch up. Then really everything's looking like that US dollar could get smashed. But for me, back above that 100 level in the US dollar index, because it is already oversold. Like if it does bounce from here, it can actually sort of surprise. I think it could actually do that.
Right.
So if you're bearish on the US dollar, above 100, you're out of your position. You watch out.
What do you think about the whole idea of, there was a lot of talk with Stephen Mirren, the one of the economic advisors of Trump, writing about this kind of intentional devaluing of the US dollar. Do you think that's happening?
I think Trump wants that to balance up trade. I mean, that's how they're going to balance it up. US dollar being a reserve currency, it's probably stronger than they want it, and that has killed their manufacturing base and created the massive deficits that they've got. So, the natural market-based way of balancing that sort of thing up is to weaken your dollar.
Right.
And probably that's what Trump wants. So, yeah, I think that's the way it's probably heading. And it's looking pretty weak in the big picture. So yeah, if the US dollar does get creamed, you're looking at gold again. Look at that, just absolutely flying. It
touching 3,700.
Yeah, so it got up there again just before the interest rate cut, and I think that's selling off because everyone's sort of like, well, okay, so it's not 50 basis points, it's only 25, but looking strong as an ox, and I'm still long and happily long gold. But at some point there's going to be some big correction, and who knows when it's going to happen.
Sure, but for now, the juniors have got some great margins, and they're doing really well.
No, absolutely.
Yeah.
There's still some opportunities out there.
Yeah, and there's some other opportunities in the ASX. We were talking about them earlier.
Yes, Well,
one of your favourites had a recent pop today. I think it's up 9% already today.
Yes, well, we've been talking about this on Closing Bell, so hopefully you've been following along. On Weebit Nano, I've been saying from about $2.20, I pulled it up for Closing Bell people. I've actually got people in my microcap service, which I've now handed on. We were in that as well, just for transparency, and I'm in it PA as well. So I've sort of started loading up below $2 on this one, and it's very interesting, this breakout that it's had. The fact that it's really confirming, for me, this is the weekly chart, and for me, it's just confirming that weekly trend, because the trend turned higher once it broke up through $2. And people should know the long-term analysis, just to give you that really big picture for people who haven't been watching. So this is the whole move in Weebit over the last however many years. And that's why I was sort of interested. We got the big clear out. Here's that sort of buy zone area where I'm saying, okay, from here is where I'm interested. And we've had the collapse over the last few years. Small caps all got hammered. We've had one attempted rally, and I quite like seeing one rally then fail and stop everyone out. And then it's fallen right to the bottom of the buy zone, and now it's turned up again. So I quite like seeing that. We've had the clear out of positions, and then the trend's turned up. And so it's like, okay, is this the beginning of the recovery, the real recovery? So it's still early days.
Yeah.
And it is still actually in downtrend. So this is where I'm saying, this is sort of the area where you've actually got to be a bit careful. This is where you start de-risking your position, because in actual fact, it's still trending down, right? So you're always trying to play your devil's advocate on yourself. And I won't trace out all the waves, but you can see the wave structure here, still trending down, still trending down. So in actual fact, in the big picture, it's still trending down. So it's still, you've got to be wary, and it needs to break out above here to actually say that trend is under threat. So what we want to see from here is for it to break above there, possibly have a bit of a retracement, and then prove itself and really go, right? So it's still actually early days, and the reason I'm a bit wary is because when you're looking at these downtrends, the area where it can fall over from is that sell zone of the wave. So you're wary in this spot. If it is going to trend down, this is where you play devil's advocate with yourself, and you say, right, well, if this thing's going to zero, let's say it's going to zero, it's not actually going to succeed. It's going to fall over in 2 years, whatever. This is where it would fall over from,
right?
Because it's now got the buying pressure there. Anyone who's bought it at $8 or $9 is still going, oh God, I hope it doesn't fall over. I hope it does actually go up. So it's in the sell zone of that wave. So this is the area where you go, well, watch out, because it could actually end up having trouble here. And you're hoping it ends up doing that, but what if it does actually break down through there? Then it looks absolutely terrible. So this is the high risk area where you're going, okay, can it get through this area? And because I was buying below $2, that's where my target is, to this sort of spot. Because this is a high risk spot where it can actually sell off from.
I mean, it's moving up 9% on no news today. I mean,
Yeah, there's something going on. There's something going on.
Yeah, but obviously,
I'd say it looks really good. Like for me, the reason I'm long is because I think it is going to go up. I think it is going to take off. But this is sort of the spot where you're saying, well, if it doesn't take off right away, this is where it can actually fall over and maybe go sideways for another year. You don't know. Yeah. So if I've taken my part profit, if I bought below $2, I've taken part profit there, selling a third, my break-even level is now below the low of the whole structure. So for me if it breaks down below that low of the whole structure, I'm out of my position, but I haven't lost any of my capital. Yeah. So I'm like, I want to get out. If it does go down there, I do not want to be in the stock. Yeah. It's going to look terrible. So now I'm long a position. I've taken part profit. I will break even on the position if it completely collapses. And now I can see whether it goes to $20. Yeah. Like, I don't know. I don't care.
It does seem like one of those kind of all or nothing plays. I know there's a lot of companies that are like that. Yeah. But the ReRAM technology, as far as I know, it's very like you either have a customer there or no one's buying it.
Who are they competing against?
Yeah.
Like TSMC and like who do you think's going to win?
It's so niche though, right?
It's so niche.
It's so niche that it's like you either want that or you don't.
And also, I think edge computing it makes sense. With robotics, with saying you're off being able to use your AI off the net, being able to there's going to be, I think, use cases that we can't even dream of yet.
Yeah, I think
that will be needed.
From my understanding of the technology, what I love so much about ReRAM is the idea that there's in the future, the Internet of Things was something that was very hyped maybe a decade ago that didn't really come through. Yeah. But the idea that many more devices require very low power, really low wattage machines
and computing on the chip,
edge computing,
and memory connected to that, so you don't have the problem with between memory and computing, the bottleneck that you get. So that's where ReRAM for me. I'm like, okay, and neuromorphic computing, does that end up happening? So it's sort of like, well, it does make sense that if robotics, if edge computing, if that all takes off like we expect, even if they don't own the market, even if they only have a small percentage, they can still grow massively.
Absolutely.
And imagine if they do actually completely succeed. Imagine if it really does take off.
What I feel though is this where they're at this stage, they need some big customer who has a breakaway product. They need someone else to kind of have an explosion.
That's why it can still go to zero.
Yes.
Or it can be worth $4 in a few years, or maybe their revenue is going to go up. They're going to be a bit player. They're never really going to take off. They'll still survive. They'll make money. You'll make 100% on your money. I don't want to make 100% on this. I want to make 1,000. I want to imagine it really succeeding. And so that's where I just want to have planted a seed, which is now I either get my capital back or it's going to take off. I've got a really good position. Now I can just find out. And I don't care whether they make it or not. It's like, it doesn't matter to me now. Now it's just, let's sit back. I hope they win. I hope it works. But if it doesn't, it's no skin off my nose. Right. That sort of thing.
Right. What else we saw this week jump up? We saw Silex.
Yes. Yeah. Very interesting.
I missed the boat on that one. I was kicking myself.
Oh, well, I'm kicking myself. I had I can't tell people the strategy, but
so this is
basically this was a perfect depiction of my strategy, which I've been waiting. And I just, with Silex, I look at their pricing and I look at when the revenue is actually going to hit. Do you want to 2030? It's still beyond 2030. But they've come out and they've said, that pretty much they're probably going to get the go ahead to go into production and get it's not till the end of the year, is it? Till they'll get the.
I believe I've got I wrote the notes on it. So they're confirming at the end of the year. But obviously, the surge this week has been based on their global enrichment testing.
Yes, and they've basically said yes, it does work. It does work, and then they're going to wait until the end of the year to get the tick, which says yes, you are officially able to do that. So look, I mean, do I love uranium? Yes, I'm long and have been and telling people for a long time. Let get long uranium. And people are trying to get away from Russian. Uranium and trying to get away from China, and we want to be self-sufficient in the West. a new enrichment technology that's going to make it more efficient. Be able to use tailings. It can do the HALEU.
The HALEU is the thing.
As well. It's the thing that can happen.
From what I've read, they've backed away from the HALEU for now, but I think it's a huge possibility there.
It's still a possibility.
Absolutely.
So it's like, who doesn't want to own a monopoly? Who gets a cut of everything? And in uranium, which possibly will be the linchpin to decarbonising the atmosphere, but all that sort of thing, that it probably will be the thing that can work. I think the right and the left can both agree ultimately that uranium could be the thing that really helps us.
And I think we're far enough away from Fukushima where people have kind of that fear has ebbed somewhat.
And just the technology on the modern reactors are so much better and so much safer. So that all adds up to this company possibly going ballistic. And maybe there's still a chance on that because it really has taken off this week, and you can see, like I was sort of watching it. So as you can see here, where it's taken off on that massive rally up to 650. I've been waiting on it, and you can see the pullback. Again, I tell people about these ABC structures where you've got the correction, then you have a rally that doesn't take out the high, and then you have another wave to the downside. And this next wave is so important because this wave is the one that stops everyone out. Because below that low, all the people who have been buying in here have their stop loss below that low. So you've had the big clear out, and I was actually hoping it would get down, to the buy zone of the whole wave down there, and I was sort of waiting and watching. And it didn't get there, and it turned back up. I actually got a signal and ended up being a wimp and not going for it.
So
the revenue's so far down the track.
It is a long way off.
It's a long way off, and you think, it probably will sell off in the next 5 years. Why would you jump on now? But of course, the reason it's turned back up is this announcement, and now it's really doing the overlap, and you're looking at this as something that can really take off. And if you're looking at on that, if you've got an investing time frame and you're thinking next 10 years, what stock on the ASX in the next 10 years could go up massively?
It's a good option.
Silex would be one of the ones that you'd be thinking about.
It's interesting when you look at the ASX uranium stocks, how many of their structures all follow the same waves. They're all broadly following the uranium market. Obviously, spot price is really important, but it's also sentiment. It's also the big regulations that come through. I haven't seen more of a correlated market than probably uranium on the ASX.
It's really taking off. As people should know that I've been sort of touting. There's your ASX uranium ETF. So you can see uranium really coming back to life. And I was telling people on Closing Bell again, this structure, pretty obvious one for me. You've got that wave structure there. You can see the big correction we've had over the last few years. And this is just how markets work. Once you get into the groove with these things, you can see you've got your wave. That was the big rally a few years ago. Uranium went a bit hot, of course, up to 100. Then it had a year correction. But really, this is all a correction. When you start seeing it all as a corrective move, any people who are buying up here, I'm telling you, they're all dumping it down here in a panic. And when you don't understand how markets behave, and this is pretty much classic move of a massive wave up. Everyone gets long and bullish. Then again, look at this ABC structure. Correction, rally, stop everyone out, and then bang, off it goes. So you've got to be able to know about those areas where everyone gets stopped out, for one, and then you've got to understand how markets turn around. So how do they turn around? There's your buy pivot. A market can't turn around without one. How can a market rally without creating a buy pivot? It can't. So why not wait for one of them to happen and then jump on? Or I've got a calculation which I can't tell you about, which gets me in at a better level. But that's pretty much part of the structure. Where do people stop out? Where is the levels where things often reverse and go back to a midpoint, that sort of thing? And then you wait for momentum to turn back up, wait for everyone to get stopped out, wait for momentum to turn up and jump on.
Do you ever do any fishing? Simple. Like put entries into stocks that are way, way below the current prices and just set them there for time?
Yeah, well, that's what I can do once I've got the pivots. So I do the calculations once you've got that in. Because again, everything is about the move, then the shakeout. The move, the shakeout.
Right.
So you're saying, right, I've got the initial move, you'll probably get the shakeout. And that's when I try to get on.
Right.
So you go, and you're going down in time frames. So you got the monthly is saying yes, but then you've got to go down to the weekly and the daily, and often you'll have reactions that shake everyone out in that time frame, and then so you're sort of trying to get through the time frames and get that right spot to get on.
Right. We had another big move in the international markets. Intel last night up 23%.
Nice. I think you're in this one.
I'm in this one.
Yeah,
We're
nice.
holding through it. We knew that the government support would be there, but obviously Nvidia has agreed to a $5 billion partnership to make some chips with Intel, so that's huge news. That's the biggest move in 38 years for the company. So it's
nice.
Well, a real redemption arc.
You know
there.
what? I think I was even talking about this in closing bell, and people can correct me if I'm wrong. But if you remember me mentioning Intel in closing bell just a few months ago, based on again this structure. So we've got the initial wave higher, and then the massive reaction. I'm actually doing the calculations off the reaction because that was the huge correction that we saw. From 2000 down to 2008. So there's that massive wave, your point of control through there. So then I'm looking at the buy and sell zones, and I'm saying, right, well, here's your sell zone, which it couldn't get through, back to the point of control, and here's your buy zone down the bottom here. So, and again, looking at those ABC structures of corrections, can you see the failure? The initial rally, which gets people long, thinking they're right, they all put their stop loss down below that low. Then you have the clear out, which takes everyone out down to the bottom of the buy zone. And then you're waiting for the moment when things kick back higher. And so now you've got the target back to the point of control of that wave, right? So that's probably where it's heading. So it's all those structures that they're happening all over the place. So you've just got to know how to pick them out.
Fair. And then I want to finish off talking a little bit about AI because we thought we saw some opportunities within some software companies. Yeah. And so, I mean, the themes of the week or this month have been really about job losses in AI.
Yep.
We've seen a lot of that. I mean, Oracle, another big gainer last week, went up, 36%, quietly shaved off 3,000 jobs at the same time. No one even noticed, right? They're just
Well, it's really happened. I think it is starting to happen. I know I was researching Salesforce. I've got the new service, International Stock Trader, and I'm finding out so much about these companies, trying to work out what's actually going on. And Salesforce, they've got like 20%.
The world's largest CRM by far.
World's largest CRM. Everyone knows them. They've got like 20%. The next competitor's got like 4%.
Yeah.
So they're like a massive business. And I started looking in, and they've got this agentic AI product that they've just released recently, and they're not seeing great sales from it. And they've actually been selling off, and people sort of talking about it. But I'm thinking, and I listened to their sales. Can I actually type? I was listening into their call on their quarterly, and what they were saying was that they're not seeing as big a take up, but the pushback they're getting from the C-level C-suite is they've got a bit of AI fatigue. They're being bombarded from all corners, all these big businesses, on what step to take to make them more efficient. They're not quite sure which step to take, and so they're not taking up things straight away because they're still in, I guess, decision paralysis.
Absolutely.
And that makes sense. That everyone's still trying to work out where the positivity and the real revenue bumping ideas are going to come from with AI.
I'm trying to think where, I mean, the MIT review in July was probably the biggest sign I've seen of this, but there's been a couple of these kind of watershed moments where you're seeing that fatigue come through. I mean, last year, 18% of AI pilot programs for large enterprises were rejected. This year, it's been 42% already.
Wow.
So there is certainly that fatigue, because I think a lot of it is just they don't really know what they're doing with it. These large enterprises are so slow to move. Their information and data is so siloed.
And once you do go in that direction and you do the investment, and then it becomes sticky and it's hard to go back. So I think they're sort of sitting back waiting to see what is going to take shape. But I think of someone like Salesforce, and I was thinking it through, going, they've got 20% of the market.
And it is
how much data is that to be able to work on with their agentic AI?
Absolutely.
How amazing. So people who have already got a good market position, who have huge data that they can use for their systems, and now if their agentic AI is good, what a value add that is, to be able to say, right, you want to know when to call your client, what they're doing. They can research the client and say, hey, this is happening with them. You should give them a call, blah, blah, blah. Just being able to add value to their CRM, which is already the market leader. Maybe they go from 20% to 40% in the next 5 years because their AI is so good, because they own so much of the market. They've got the data that other people don't have, that they can create something great. So I was thinking, oh, maybe that's the way that things are going to go, is maybe the strong will get stronger. Like in that, the Pegasystems that do business process management. They're like a world leading business process manager, has been. They deal with very large corporates. Now, if they say, right, now we're doing AI, we've already got the client list. Hey guys, look at what we can do as far as business process management to help you gain efficiency. You know, maybe being in a strong position already, they're going to take off.
Yeah, I think the other point with Salesforce is it's probably like the definitionally stickiest customer group that exists within software. If you just look around at small businesses, they completely rely on that customer relation management tool. It is so valuable to small businesses.
And if this agentic AI, which you can make, it makes sense that if they can create a product that would really meld beautifully and add a lot of value to customers, I can't see why other people wouldn't end up flowing towards that power and saying, well, geez, why wouldn't I? They're already the biggest, and now they've got a really fabulous AI on top, which helps your business become more efficient. Sales go up more because you've got this great help. So for me, I'm like, and they're selling off on because the sales haven't been that great.
It's the same structure in Teams as well. Atlassian is a very similar kind of structure. And I think from looking at my own kind of guess of where these bad structures began, it's not like their sales are terrible. It's more that Satya Nadella, the CEO of Microsoft, he came out very loudly being like, AI is going to replace all of this software tomorrow. Like what they call CRUD, create, read, update, destroy. So it's all these things that interact with databases like the CRM tools. He's like, they're all going to be eaten by AI tomorrow. And so all these companies have been, all this bearish idea of AI taking over. And I think it's really in the short term massively overstated. People aren't going to be dumping Salesforce to go create some new AI that is untested with all this data that's so sensitive. I just think I think there is opportunity on the floor here.
So that's why I just wanted to show the Pegasystem. So this is the Pegasystem. They've got smashed down to $20, and see how they're since April they're really starting to run. And for me, this is one that looks like that people cottoning on to the fact that, hey, they're in a great position to be able to help businesses with AI. They're already business process managers. They can go to them and go, right, we've got a product for you. We can help you. Then they can go to so many other businesses and say, look, we've got the answer for you to help your business. So
it's a bird in the hand that's better than two in the bush kind of moment for these companies. I think. And
so the strong may get stronger. And so like with Atlassian, very interesting chart. I've
there's a lot of skepticism baked into that chart. You can see it, right?
So here we have Atlassian, and again, you got that beautiful run into 2022 up to $480. Okay, it's not above that high. It's definitely in a corrective phase, and you can see that it's gone down again. Similar structure. What I'm talking about, these ABCs: the failure, the rally that gets people sucked in, then stopping them all out, going down into the buy zone area, and where it gets interesting is seeing how it's performing since then. So it is actually starting to trend, right? So we've got this trend starting to develop here. There's your trend. There's your failure to the buy zone. There's your next wave up. And this is interesting because it's actually taken out that previous high in the down wave. So there's your hint that maybe the trend is actually turning up. And so you want to be buying on the corrections once it turns back up again. So here's that most recent wave down into the buy zone. So this is an area where you really want it to start seeing some buying pressure soon, because below here, it looks pretty shit.
It's down to 80.
Like it can have a really big clear out, and maybe it does go to the bottom of the buy zone and then take off. Like it could happen. So from here, I'm not buying it now. But tell you what, if the buying comes in, if I see it next month do that and create the signs of actually turning up, I'd actually be pretty interested, because I've got enough there now to say, right, I can buy there, have a stoppy below there, and have a bit of a punt.
Yeah, but it's the same story. It's this kind of, will AI take over jobs tomorrow?
Yeah.
and who knows with that.
Yeah, well, we're seeing the signs where the employment figures are starting to look a bit soft. And I think it is going to be a theme that it could be stock market up, unemployment up, which is weird. And I guess at what point does the unemployment get so bad that stocks then start going down, or at least the retail, real estate. When do people say, oh, geez, the unemployment figure's going a bit high here, and rates then maybe need to drop more rapidly than people expect.
And historically, when unemployment starts creeping up like this, it does tend to hit a point where it just goes vertical, right?
Yeah, well, and with AI, you'd think there's got to be, it's like the S-curve, sort of, when's it going to hit that point where it really starts to get exponential? And maybe we're going to be seeing that in the next year or two, where businesses do start to say, and robotics and we can actually start to lower our numbers a bit here and still survive and be okay.
Yeah.
So I think that's going to be an interesting thing to watch.
It will, certainly. Well, I think that about wraps us up today, mate.
Yep.
Thank you for having me on for the first time.
Yes, well, welcome. And I look forward to a long future with you.
Indeed.
And thank you guys for watching.
Thank you very much.